So let's go ahead and review today's price action. I'll start by looking at the daily chart. So coming in today, some of my thoughts were, one, this looks like a type of a flag here. So we have this fairly tight channel up, and then what the last week was this pullback, this flag down like this. Now, if we're able to break out above this flag, then we could be looking at another move higher. Specifically for today's trading, I felt like we were going to want to test down below these lows here. So this low and this low. I felt like the market would want to try to get down there to see if there would be sellers down here or buyers. And also if it goes down here and fails to go lower, that would be an early low of the week, and then the rest of the week might trend up. So I felt like the market was going to possibly try to test down here today, and it still might this week. But I was thinking there might be a test down. So that's kind of what my premise was going into today. And we opened within yesterday's range. So we opened here, right in the middle of yesterday's range. And I was thinking, if it doesn't get down to the low like we were talking about, it might be interested in getting down to the midpoint of yesterday. So I have the midpoint drawn in here. It never got down there. Ultimately, where it ended up being bought was at the 200 moving average. And it always amazes me how impactful this 200 moving average is on really on any kind of chart you look at. I mean, clearly it went right down to 200 moving average and got bought and was up for the rest of the day. So our first bar was a doji. I remember sitting here watching this doji form, and then the second bar was sideways for most of the bar. And I remember how bored I was feeling during those first couple of bars. I usually don't take many trades in the first 10 minutes, first 30 minutes, unless I'm unless I think that the low of the day or the high of the day is happening at the open, then I'm really not interested in taking many trades on the open. The trade I thought was reasonable on the open was this double bottom with a good looking bull signal bar here. So different ways to look at it. You could look at it as a wedge. Right, we have multiple attempts down here, and then you get this second entry long here. So there'd be buyers above this bar, this bull bar, the bar 2, then pullback, then above bar 4, it's the second entry. So second attempt for the bulls to go up. And after this gap up, that increases the chances that there'd be a trend today. So I think buying above this bar, either for a scalp and just scalping out somewhere here, or going for a swing trade, but in on the low of the day. I think either of those are reasonable. And wedges are common, especially on the open. Really, the reversals are common on the open. And we have a second wedge here. So this tail here is first push, pull back, second push, pull back, third push. So on the open, I like to look for reversal patterns because there are so many reversals that happen on the open. So there's often many chances to get these reversal trades that can be either scalps or swings. And this is another example. So we have a wedge pattern, good looking bearish signal bar. You could also look at it as a failed breakout above these highs here. All right, we have attempt up, attempt up, attempt up. Breaks out, but then immediately fails. So there might be some buyers getting out below this bear bar here. As we see, that's what sent it down. And that became the low of the day down here. So I think reasonable for a scalp or a swing trade there. And if you're selling here, I think you're betting on that this would be the high of the day. So I think it's reasonable to go for a swing trade because I think you can bet that it's going to be the high of the day. You sell below here, go for 2 times your risk, and that puts you right exactly where this low was. So probably a lot of people did that. They sold here, went for 2 times their risk, and got out right there. And with the confluence of that 200 moving average, that caused a lot of buying right at that level. So fairly tight move up here. 4 bars up, 2 of them being fairly large. And when that occurs, you'll often get higher prices. So sometimes you'll have one strong leg, small pullback, then you'll get a second strong leg up immediately after. So it'd be something like this, and then it goes up. A lot of the times, though, it'd be something more like we got today, where you have a strong move up, and then this extended pullback where the market goes sideways to down for a while. And then that second leg up ends up happening several hours later. So maybe I could draw the measured move up from this low. A lot of the times I like to draw from the breakout point. So once we actually start breaking out above these highs, then that's where I like to put my leg 2. Unless we have a strong rally here at the end of the day, which I don't expect that we will, then looks like we're not going to hit that leg today. But we still got a move up, right? So all this strong buying, deep pullback, ultimately it did lead to a trend up for a couple hours. I have this buy marked here, in part because we could expect there to be some buying off of this. We can see all these attempts down that the bears made, and we can look at another wedge pattern here. First push, second push, third push. It's a wedge at the moving average and with a good looking bull bar. Once again, I think that's reasonable to buy for a scalp. Like you can go for 5 points or you can go for a swing trade up. Next trade I have marked is buying here above this bull bar. And really, I was wanting to rather buy above one of these bars down here. I just didn't quite like the setup, the big, larger tails on top. I would have preferred to have bought down here instead of having to buy above a big bull bar like this. If you're ever unsure, it's always better to wait for the pullback to happen. So breakout, pullback, and then we have another setup for a long here. And this long you would have at least been able to avoid a loss once it got way up here. To me, why it would still be okay to buy above this bar, even though it's only the first breakout, is that we've already had this head and shoulders bottom through here. So we can look at it, left shoulder, head, and right shoulder. And to me, it felt like buyers were accumulating strength through here. And then that first breakout often would be a decent enough of a pop up for you to be able to make a trade out of. So that's why I felt like this breakout would be able to work here, and why you wouldn't necessarily need to wait for a breakout on this kind of a trade. But it's always okay if you're unsure to wait for a pullback and see what you get after that. Now, for the rest of the day, we're kind of at the end of the day here. Another wedge pattern right here, right? 3 pushes down. To me, I would not be looking for more longs at this point. Like I would not be betting on that. This is a wedge that's gonna to look for a buy. I would rather be looking for this to get below the moving average, and then look for this wedge to fail, and then for a short to work. I feel like after we went sideways so much through here, and then we were expecting more up after this strong leg. We were expecting higher prices, and the bulls failed to get up there. So I think now odds of us having a strong move up now are lower, and the odds of us failing to go higher here and have a trade set up to be lower, I think those odds are higher now. And I don't often take trades after 3, but sometimes there are some good setups that do occur. Often there will be trapped traders at the end of the day. And so like today could be an example of that. You know, the buyers have been making money all day. And if the market starts to go down here, then they might feel trapped into their longs and they want to go ahead and get out before the end of the day. So you have all these people with long positions. It's near the end of the day. They're worried that their profits are going to get eaten up at the end of the day. And so they just want to go ahead and close their positions, take what they have. And that would cause a fairly quick sell off here at the end of the day. But that setup hasn't happened yet. That's just kind of where my thoughts are, where we're at, and how I would look at like the last hour. So for looking at trading tomorrow, I would consider that this flag might play out. So strong move up. We've had a bit of a pullback here. And I would be thinking about that there's possibly going to be a breakout up above here. So how would I go into tomorrow thinking about it? Well, so far we have a decent bull bar closing near its high. Now, like I said, this could change in the last hour, and that bull bar could be weakened, and that would change the dynamic of this. But this flag, if this breakout is going to work, we'll probably get an early low of the day tomorrow. So early low of the day might be some sort of wedge pattern like we had here, like a double bottom, second entry, or a larger double bottom like we have right here. So I'd be going into tomorrow looking at trying to find some sort of low of the day, some sort of bottom pattern, some sort of test of the moving average or a test of a prior low, and then try to look for longs above that. And so in that way, you're kind of using the potential for this big breakout. The odds are still fairly low because we have had so many sideways bars, but there's a chance that there would be a breakout above yet for tomorrow. So I'd be trying to find an early low of the day and get long above some sort of entry, some sort of setup after there's a possible low on the open tomorrow. So that's all I have for today. If you guys have any questions, I'll be happy to answer them. Just leave them in the comments. All right, see you guys next time.